Hello and welcome to the Financial Bunny TV. My name is Nicolette Mashile and this is Product Focus. Today we're talking all things credit life insurance. What is it? When do you pay for it? And when does it pay out? Now, before I get into all of that, please do remember none of my videos constitute as financial advice. If you are, however, looking for financial advice, please do speak to somebody who is certified and registered with the FSCA. So credit life insurance basically is probably one of South Africa's most taken up insurance policies, but one that is least used or claimed from. Why is that? It's because a majority of people don't know they have it. It's as simple as that. A majority of South Africans do not know that they've got credit life insurance. While it is not an insurance policy you are forced to take, it is one that is mandatory, and most financial institutions will probably try to sell you credit life insurance. And I say this because it's very, very important to understand. For instance, let's say you are going to get a vehicle asset finance loan from the bank. So you are looking for a car loan, right? You go to the bank, you get your car loan, it gets approved. The bank that approves the car loan can offer you credit life insurance. However, you are not forced to take it from them. You can go and sort your own credit life insurance policy from another company. Why is this important? For me, it's important because banks are not insurance companies. And I know the banks are going to kill me for saying this, but that's the reality of life. Do they have insurance arms and departments and businesses that they're creating within their banking sector? Of course they do. But the question you need to ask yourself, if you are looking for a competitive rate, you probably want to go to a company that is in the business of insurance. Okay? Very simple. You want to go to a company that is in the business of insurance, not a company that's in the business of banking. Step number one. Step number two, it is capped. It is capped how much you are going to pay when it comes to credit life insurance. And I want you to go and read up on this on the National Credit Act, because it will tell you how much money you are meant to contribute. It is probably one of the cheapest insurance policies that we do have in South Africa. I think for every 1,000 Rand that you are paying, it's like 1 Rand or something like that. But it is actually one of the cheapest insurance policies that you're going to get. Now you understand, when an insurance policy has a very low premium, it also means that when they pay out, they do try to make it a little difficult for you, right? Now, why do I say this? I'm saying this because it sounds as if, oh my goodness, this thing is going to pay out every single time you need it. And now I feel like I'm rambling on because you know what? I didn't even tell you what the insurance policy actually covers you for. So when you take out credit, whether it's a car loan or you're taking out a personal loan, you're taking out a credit card loan, you can take up credit life insurance to cover that specific credit. So if you find yourself in a situation where you are unable to derive an income due to 3 things that major credit life insurance policies will pay out for is temporary or permanent disability. So, Nicolette Mashile is a speaker. My voice is my asset. If I have some sort of laryngitis and I'm booked next week for an MC gig and I can't do that job, that is classified as an example of temporary disability. I broke my ankle in December. I was unable to walk. So if I did have some kind of credit life insurance and I'm finding myself in a situation where I'm actually temporarily disabled, I cannot derive an income due to an injury that exists, I should be able to go to my credit life insurance policy and say, hey guys, I need this thing to kick in now. The second instance is if you die. One of the things we know in life that is very guaranteed is the fact that your debts do not die with you. If you die, your debts still need to be settled. And a majority of what happens in many instances with people who are not adequately prepared is that they go and get their estate wound up and then they make the estate pay for debts that are outstanding. Because let me tell you, the bank is not going to let it go. If you owe them money, they want their money. So essentially what you're going to have is that if you die, it means you are unable to derive an income. Therefore, your credit life insurance policies need to kick in and actually pay for those assets, right? But it is predetermined policy by policy. So it's on a case-to-case basis as to how long the policy is going to pay for. Some policies are willing to pay for 3 months until you get the new job. Some policies are willing to pay for 12 months and get the new job. Some policies are willing to pay for a settlement of that outstanding debt. So it's important to also read the policy documents. What are the terms and conditions, so that you've got a full understanding of what the expectation is, because there's nothing worse than contributing to an insurance policy and then it does not pay out. Now, there are also instances where the premium that you are paying should decrease as the outstanding balance on the credit also decreases. Hear me out. If you, for instance, have a car loan and you start off at 300,000 rand, you've bought yourself a nice Verpa. Okay, 300,000 rand is being very modest for a Verpa. But let's just go with it, okay? Work with me. So you've bought those cars, 300,000 rand, that's how much you owe. So they calculate how much your credit life insurance is going to be on the 300,000 rand. But as it goes down, as you are paying, that 5 years, this is going down. If you lay by 4 years, you're probably owing like 70,000 rand. The credit life insurance must also go down. It must follow suit, because that's what it's supposed to look like. But again, because it's an insurance policy that most people don't even know they have, people tend to neglect it, so they don't go back and get an adjustment of that insurance policy. Right. The last instance where a credit life insurance may pay out is in retrenchment. If you are being retrenched, that is outside of your control. If you wake up tomorrow and you get to work and there's posters on the doors to say, "Msebenzi uphelile," what are you going to do? Then you need your credit life insurance to kick in and actually pay for some of those things until you are able to secure a new job. Now, one of my favorite parts of this product focus feature is what happens, or what instances would a policy not pay? It's not going to pay if you get fired. If you're getting fired, it is not paying, because that is a voluntary. You are choosing to lose your job because you are doing unscrupulous things emsebenzini. The second instance is if you choose to resign. Now, I know people say, but I resigned because it's a toxic environment, or I resigned because I want to. Guys, please don't resign without securing a new job. Please do not resign without making sure that you've got an exit strategy. An exit strategy means that you have saved enough in your emergency fund for you to resign from the job. Please, your pension, your retirement fund is not the exit strategy. And I'm so glad that on the 1st of September, the two-part retirement system kicks in. Because remember, what the two-part retirement system says is that in this new reform of the retirement space, you cannot withdraw from your retirement component. You can withdraw from the savings component, but you can't withdraw from the retirement component. So there's no longer this manga business of wanting to resign and then withdraw all of your money from your retirement fund. Because we are sitting with a problem. South Africans cannot retire comfortably. Only 6% of South Africans can retire comfortably. What is that? It means that you are able to replicate or replace 75% of your current income in retirement. Now, I want you to think about retirement. Retirement is tough, guys. Because in South Africa, we also have a very weird culture of taking dikoloto, debts, into retirement. Now, if you ain't working, how are you going to pay for those debts? How are you going to pay for those debts? Or, men, I'm specifically speaking to you now. Stop making children. When you get to the age of 40 and you know you're close to retirement, stop making children that still need to go to school. If you do not have a plan of how you're going to derive income to take them to school when you are in retirement. This is why we end up having amakehla working after retirement. Because they got kids, they got to take to school. You've made too many kids. So you got to think about your life. When we talk about family planning, it's not just for the women, guys. It's also for the men. Make sure that you don't take up any liabilities into your retirement. And medical aid becomes very expensive in retirement because everything is unhinged in your body. Your hips are getting undone. Your ankles are easy to break. Everything in life, so it's very important to ensure that you are taking care of the things that need to be taken care of. So, 3 instances where it will pay out. temporary or permanent disability, retrenchment, or a death because you've got a death benefit, right? Instances where it will not pay out. You are getting fired. You are choosing to leave the job, which means that you are resigning, or the reason you can no longer derive an income is within your control. But again, most of the insurance companies that are having this insurance policy for you have their different wording, different terms and conditions and all of that. Now, people come back to me and say, and it's a very interesting conversation because I've just had it with the technical team. But what happens if I never claim? Sorry, it's an insurance policy. It's not an investment. I need the cash back. No claim bonus. You did not claim. Unfortunately, you paid an insurance premium. So there is no return on it. It's not an investment. What do I mean by this? Insurance is a promise to you made by an insurance company that if something is to happen and you incur a loss, a financial loss, they will step in and pay you a predetermined amount of money. If that loss does not happen, they have kept their promise. The loss did not happen. Therefore, they do not need to pay out. And as long as you want the promise to stay in place, you need to pay them a premium. If you die, and that means that you have incurred a loss on products like credit life insurance, income protection, life insurance, funeral covers, where it's your life that is being insured, you then have a set of beneficiaries that death benefit will then be paid to. Once again, please remember, none of my videos constitute as financial advice. If you are looking for financial advice, please speak to a financial advisor or planner who is certified and registered with the FSCA. I'm going to leave this one right here today. I'll see you on the next Product Focus.